there, Maverick Traders. This is Rob Ronhold again. This is the Trading Room. It is our last monthly options expiration week in 2024, so let's go out with a bang. In this session, we're going to be going over the news of the week. We're going to take a look at the markets, score them from +3 to -3, and we're going to score the sectors. The sectors have really told the story here. And then, of course, we're always looking for setups, so I've got some bulls, bears, and sideways stuff for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, let's talk about the news of the week first. There wasn't a ton of news, but we did get some new all-time highs. So we hit new all-time highs on Wednesday, pull back a little bit. But look, I'm going to be getting a little bit deeper into the market and showing you some other indices to really show you that this has all been driven by the large cap tech stocks, the Qs. The Qs are the only thing that really look good here. Everything else looks pretty bad. Next week, we are looking forward to a rate cut. The market was about 70% last week, and now it is at 98%. So that's pretty much a done deal. And what we've seen is that interest rates have crept up this week quite a bit. I mean, take a look at that chart. They've really crept up. And I think people are starting to believe that we are now at the end of the rate cutting, that we aren't going to get all those rate cuts we were promised because inflation has been a little bit more stubborn. We did get some good earnings again this week. Broadcom hit an absolute home run in the chip sector. Ciena also delivered a dynamite report. So there's still good news rolling into this market. And if we take a look specifically at inflation this week, we had two reports. The CPI came in as expected. And when the market got this number, the market was very happy. 0.3, 2.7% year over year. Very, very happy. It really is the sweet spot of what the Fed is looking for. 0.2 would probably be a little bit better, but 0.2, 0.3, those are great numbers. Yes, a little bit on the high side, and yes, we actually went up to 2.7 year over year from 2.6. But look, those numbers were just fine. And then we got the PPI on Thursday, which is not as important, but you can see it came in a little hot. 0.4 instead of 0.2. And the market kind of sold off a little bit, but not much. This market is still overall in a pretty decent mood. But I got to say, again, I'm going to get into some charts, and you're going to see that there is some weakness underneath the surface that I really want to point out here. Let's take a look at the final numbers for the week. The final numbers for the week, you can see the Dow was down. The Dow is a stupid index. I hate even having to talk about it. One day this will be gone, but today's not the day. Okay, so the S&P, you take a look at that and say, okay, there was just a little pullback in the S&P. The Qs were up. Qs were up nicely. But then take a look at the Russell, down 2.5%. All of a sudden, you're starting to see that without those Qs, and remember, the Qs are about 30% of the S&P. At least, sorry, the Mag 7, the Magnificent 7 stocks are about 30% of the S&P. So if the Qs were down, the S&P would have been down much, much more. And if we take a look at charts, you can see that the S&P chart is looking like a high base. And yes, we made those highs, and then we pulled back. We pulled back just a little bit, but this looks like a high base. That's all you can say is, oh, high base. This is a +3 market. You come over here and you take a look at the Qs, and you're like, oh, wow, the Qs even broke out. New all-time highs, and that closed on Friday. Hey, that looks pretty good. Everything looks pretty good here on the Qs. Here is the RSP. This is the equal weighted ETF for the S&P 500, meaning that every single stock has the same weighting. Totally different story here. Take a look. I mean, we topped out in the end of November. That was our top. And we have been declining since then. So we've had 2 full weeks of decline overall in this market. And then you take a look at things like the Russell 2000. And you can see the Russell 2000 has had the same kind of pullback. If you take a look at the weighting, and I'm going to put up the chart of the weekly heat map, you can see these big stocks. If you took them away, it didn't look all that good. So I wanted to really come on this session here and really talk about how, yes, we're still bullish. Yes, the numbers are all still showing us bullish market, but there is some erosion under the surface, and sector rankings are becoming so important. If you want to completely throw out the S&P, the Qs, throw out the markets and just say, I'm just looking at sectors and I'm going to make all my trades based on the sector score, I fully support that. So here we are, the last week of a full week in the markets. Next week is going to be a half week. Shouldn't say half week, but market's going to close early on Tuesday and be closed on Wednesday. So this is really the final week, and we typically get bullish price action at the end of years. There is a bullish bias to the end of the year, and we get something called the Santa Claus rally, which is the last 4 days of the year and the first 3 days of the year. So we're going into this seasonally bullish period. And I think we also have what we had in 2016, where people don't want to sell today because I think they might be getting lower taxes if they wait until January to sell. So again, everything's like deteriorating under the surface, but then we've got these seasonality patterns. All I can say is it's a little muddy right now, and I think if you just throw out what the S&P is doing and just look at the sectors, you're going to do much better than trying to figure out what's really going on. We do have the FOMC meeting on Wednesday. We're going to get a 1/4 point cut. The question is, are they going to walk back some of their future cuts? I actually think they do. And I think that's why we've seen the move in interest rates go a little higher. But again, that's just my opinion and speculation. That might be a little bit more bearish for the market if those future interest rates are peeled back a little bit. Next week, we're going to fit in a lot of things because they're going to really scale back on the news announcements they release on the holiday weeks. Retail sales on Tuesday. Again, it hasn't been super important, so I don't think it's going to be that big of a deal. As we talked about, Fed meeting on Wednesday. Probably the biggest report is going to be this Friday, core PCE price index. This is the Fed's favorite inflation indicator. If this comes out hot, I think you can really take a look at those future rate cuts probably not being there. And again, that market is not going to like that. The market's at a +3. As far as how we have scored the market's at a +3. But if you scored the RSP, the market is at like a 0 or a +1. Here's where I always get very cautious. Whenever you start to find other data than the data that you always look at, because it doesn't fit your bias, it doesn't fit your narrative. So I could go out and find all these other indexes and be like, I'm going to use this one now instead of the S&P. Look, that choice should never be made in the moment. If that's something you want to do, then what you need to do is say, hey, in 2 months, on February 1st, I am going to make the change from the S&P to the RSP. That is a decision that you are making not because things don't fit at the moment. You're saying, I'm going to make the change. I want to make sure I'm not making it in an emotional way. I'm going to set a deadline, and everything after that is going to be the RSP. So I don't want to bring in, something else that would give me a different score than a +3. We got to stick with it. It's done us well, and we got to trust in it. So this market is still a +3. But let's take a look at the sectors because they are telling a totally different story.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, Click apply at the end screen or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
We had 3 plus 3 sectors last week. They were comm services, consumer and technology. Surprise, which ones were the best performers? Comm services, consumer, technology. Technology was down, but consumer had a nice week. All of our weak things, we had healthcare was weak, real estate was weak. We had materials and energy on the weak side. Look, they all really fell apart. If you're really focused on the sectors, then you're long and short in the right places of the market. Let's go ahead and update all these scores. Utilities was a 0 last week. It's a -2. We do have some support down here. Okay, that's great, but it's still a -2. So bearish on utilities. Here we have communication services. Had a flat week. Looks like a +3 still. So +3 market here on comm services. We come over here to real estate. Was it a 0? And that's deteriorated to a -2, but the same thing. Ton of support down here. Ton of support. We'll have to see what happens here if they do break down below those levels. Healthcare has been our most bearish sector, and it continues to be the most bearish. It was a -2. It's going to go to a -3. I've seen a lot of our traders short in healthcare and really enjoying the falling market here. Next up, let's go to industrials. Last week, industrials was at a +1. So this was Friday's candle last week, right here. And we said, okay, it's pierced through this first level. We got to get less bullish on it. And you can see that we had 5 down candles, all red candles, all selling. We've gone from a +1 to a -1 in just 1 week. And we've seen really the same thing with financials. Financials did not bounce. Now, they didn't fall as hard as industrials, but look, all red candles. All red candles. There was just selling all week long in financials. Not as intense, but still, we're at a 0. We're below the 20, we're above the 50, and that is flattened out. We are at a 0 here on financials. So again, things have deteriorated quite a bit over the last 2 weeks. But then you take a look at consumer, party's still going. Party's still going there, +3. You take a look at tech, party's still going, +3. And then we come back to materials and energy, and you can see just an absolute disaster. This is now the weakest looking sector here. We broke below that last support in November, and we are just in free fall. And specifically, a lot of the miners, a lot of the gold and silver miners are really in some free fall, and I've actually got a short in one of those for you today. And then energy went from a -1 to a -2. So again, energy continues to fall. Same thing. 5 red candles. Even though we had green days, all red candles last week. So this is where we were last week. We had tech, consumer comm services being the strongest sectors. And then you can see in the middle, and then materials and healthcare were the weakest. So what happened this week? Well, materials and healthcare just got weaker. Everything in the middle just got downgraded. But tech, consumer comm services didn't move. This is a fairly rare looking chart. You usually don't see this. A lot of times the market's all clustered together. This is definitely telling a story. This is telling you that this run in the market is very narrow. And if you aren't long in the right things, it's been very, very difficult. If you've been short in the right things, it's been a great market. Even though you're hearing about all-time highs, if you've been short in the right things, you've been having a really nice week. And if you've been long in tech, consumer, and comm services and short everything else, you're having a very, very nice return here for the month. This is likely going to change, and one thing is going to have to happen, or one of two things. Either tech, consumer, comm services will get hit, and they will start to deteriorate, and the whole market will deteriorate and go into a bearish market. Or tech, consumer, comm services will stay strong, and then we'll see stuff like industrials and financials probably start to improve. These are the two sectors that should improve. All of these, maybe materials might improve, but I think these are really going to be in some trouble here. I don't see these really having a huge jump other than materials. Materials could have a move, industrials, financials. So look, if you are going to lean more bullish, then I think you take some speculative longs in industrials and financials. But you want to just stay long the winners here, and then of course stay short the losers. Let's jump into our trade slots. We had 2 trades roll off last week. We had a Disney trade that ended up in a max loss. We had a TECK trade that ended up in a max gain. So basically a wash here for the week, but had some really good things working underneath. We are going to stick with our scoring system, which means this is a +3 market, regardless of what the RSP is saying. So these are the slots that are available to us. So if we take those slots, we're going to use those slots and fill it with new trades. I'm going to be adding 5 new trades this week. And I got to say, I want to stay bullish. And this is where it's really fun to take a look at the slots because you do have some discretion in there. So I still want to lean bullish. Here's the problem is I wanted to get short in like energy. Here's the problem. Look, I already have 1 -2 and 1 -1. I can't get bearish. I can't take 2 bears. I can't take a short in materials and energy. I can't. I had to choose one of them. So we're going to take a short in materials since it is the weaker sector. And now I want to add on some bulls, but there's really only 3 sectors that are bullish, and I already have a +3 in tech. I've got a +2 here. So comm services was an easy one. I had a slot open, but I can use it to fill 2 slots. So I am going to be taking 2 trades in the comm services sector. Yes, you can do that. You absolutely can. I'm going to take 1 extra trade in consumer. So I will have 2 trades in both of these sectors. So again, if these sectors continue to work well, this is going to be a really nice return. I'm going to take a sideways trade in the financials as well. And that's going to give us 11 trades in this basket. So let's go ahead and take a look at some of those possible trades. Looking in the comm services sector, first trade is going to be our +1 trade. So this is Fox News, FOXA. And you can see it has not deteriorated whatsoever. It had a nice jump off of this earnings, ran all the way up to 47.50, and we've now spent a long time in this base, ascending triangle, whatever it is you want to call it. But you can see 47.50 is resistance, but we know high bases. High bases tend to break out of these bases. I'm looking to do a +1 trade. I'd already determined to do a +1. So this is a pretty easy call. It's going to be a very wimpy trade. It's going to be 2 weeks out, the 46.47. So I'm looking at playing this right here. It basically just has to end at the top range of the base. If this breaks out and runs, I don't get any extra out of it. I just need it to be above 47 by December 27th. That's going to give me a max gain on this one. If you do want to get a little bit more bullish, I think going out to the 48.50. So 46.50, 48.50 on a spread. I think that's going to give you a nice little 1.5 to 1 risk reward on that trade. So Fox News is the first trade in the communication services sector. The next trade in comm services is DJT. All right, now if you're not familiar with DJT, this is Trump Media. This is Donald Trump's media company that owns Truth Social. Now look, yes, we just transitioned from Fox News to Trump Media. I want to talk about this stock because I think this stock is a great example of how to really do this business as a trader. Years ago, we used to have our trading summits at the Trump Hotel in Las Vegas. It was a nice hotel, nice meeting space. There was no casino in there, no smoking. We liked it. But it became a little bit too controversial. So we decided, okay, you know what? Let's avoid the controversy. Half the people are going to be happy with it, half the people aren't. Let's just go somewhere where everyone's happy. And so we made that decision to, keep the peace, whatever. When it comes to trading, you don't need to do that. You don't need to avoid stocks. This is a real test to see if you can really just look at a stock chart and trade a stock chart. So let's say that you are not a Donald Trump fan. Can you buy this stock? can you make a bullish trade on this stock? It should be yes. It should be yes. If you are a Donald Trump fan, can you go short this stock? Would you ever short this stock? If the answer to that is no, that you can't do it, then you have some more work to do. Look, you can have all your political opinions. You can not stay at a Trump hotel. You can go to Trump hotel. But when it comes to trading, you've just got to trade charts. Your personal bias should not matter. Just like if you love Teslas, can you go short Tesla? If you don't like Elon Musk, can you go long Tesla? If you can't, you got work to do of getting your bias out of here. So I like this trade here just because it's a decent setup, but I really like the challenge for people to break that barrier. If you were never able to, go long a stock because you didn't like the company or you didn't like the management or whatever, that's a bias getting in your way as a trader. That means that every trade you make probably has some of that bias in it. So here's an opportunity, especially all you non-Trump fans. Can you make a trade? Can you make a bullish trade on this? Now look, let's just go off the technical setups. Let's say we don't even know what this company is, what this stock is. We're just trading a chart. As you can see here, we got a nice high base, 34 to 37. Nice high base. If it breaks out, next resistance is up at 44. So yeah, it's a decent looking chart in a sector that's strong. I've already determined I'm going to do a +2 trade. So I'm doing the 36.40. This stock is a huge mover. It's a huge mover. I mean, take a look at the scaling. We've gone from 56 down to 13. It's a huge mover. So this is not asking the stock to do a lot. 36.40 is going to be the trade on a bull call spread. All right. Let's get out of the controversy now. Let's just get back into financials. Financials, we're going to be in a zero. So here's Berkshire Hathaway B shares. Ultimately, you can see that we are trading between 440 and 480. That is the range. But we did just break down below the 50-day moving average. So I would like to play more down in here than up to the 480 range. To me, I think we're probably going to have a hard time getting above that 472 that we see here. So the question is, where's the midpoint going to be? Remember, on a butterfly, you have to choose your midpoint. You could choose 460. You could choose 450. I'm going to choose 455. So just slightly below the current price. I'm going to be doing the 440, 455, 470. So this is the area I'm playing here. And my profit window is probably right in here. So look, if it stays in that area, I'm going to give it 2 weeks. That's going to be a really nice gain here on a zero play on a butterfly. All right, let's jump into our bullish trade on consumer. We already have a +2, so we're looking to do a +1. This is Elf Beauty. Now, when I went out and looked, this has been a very strong sector for a long time. And sometimes it's hard to go into a sector because there's so many things that have run so far. I wanted to find something that was a little bit earlier in its run than something that's been running for 6 months and trading at all-time highs. So this is the stock I came up with, ELF, and you can see just a really nice bull pullback. Just a really nice bull pullback. We ran up, made a new high, had a pullback, volume was moderate, and then we got a really nice 7% candle today. There's no reason not to think that this thing isn't going to go up and make a new swing high. So we got all the way up to 150 is a potential target here. But remember, I've already predetermined I'm doing a +1 trade. And if I'm doing a +1 trade, it's going to be pretty wimpy. I'm doing a 138, 141. So basically, right here. I'm playing it just a $3 spread. If you want to be more bullish, then I think a 140, 145 makes sense. You could go all the way up to 150. I don't think that is out of the realm of possibility. But again, I'm trading my slot system that says, no, you're going to do a +1 on this one. So again, that's Elf Beauty in the consumer sector. And then for our only short that we can put on, because we only had one slot available for a short, I chose materials, and this is Barrick Gold. So Barrick Gold, you can see, has been falling for a while. Remember, gold is trading near all-time highs. And I want to say that in November, gold made an all-time high. This stock was plummeting. As you can see here, what we're getting here is a descending triangle pattern. We're just having lower highs, and we got this support here at 16. Look, this is a great looking short to me. I think it's going to break down and probably break down into the low 15s. But my slot system says I can only do a -1 trade. So I am constrained by what my system says. So I'm going to be looking at doing the 1750, 1650. So basically, if it's below the lower line here, the max gain. If it's above 1750, max loss. That's going to be the trade. If you do want to be a little bit more aggressive, I think a 1716 is looking really sweet. I think that looks really sweet. I don't think that is asking too much for that stock to drop. It looks really poor at the moment. All right, let's wrap this up. As you can see, the broad market indicators, the SPX and the Qs, are not telling the whole story. If you look at the sectors, it's telling you the whole story. We always talk about, focus on the sectors. It is so important at the moment for you to focus on the sectors. It should drive where your trades are going. It should drive everything. Who knows what is ultimately going to happen with this very narrow market? Does the rest of the market bounce back and recover what they've lost? Or do those three sectors that have been pulling up all the weight, do they actually start to fall and join the rest and we become a bearish market? I don't know, but if you're positioned correctly, you're going to weather this just fine. Everyone have a great weekend, and remember, monthly options expiration this Friday, so let's make sure all monthly positions are closed by the close. Goodbye, everybody.